All right, let's talk about the anatomy of a good trade. Okay, today we're talking about the anatomy of a good trade. Now, I've put out other videos about trading and some trades and some setups, but today you're going to talk about a trade that I actually just made last night. Today is Monday. Okay, it's Monday the 28th of January 28th, 2019, and it's about 12:30 here Central Time, United States. So futures trading starts Sunday night, early evening, 5 o'clock Central Time. Okay, so right here, if you look at the middle of the screen, this candlestick is represents 1 hour. Okay, and if you look at the bottom of the screen in the middle, you'll see it says 1700. That's 5 o'clock military time. Okay, the next candlestick is an hour later, 1800. So that's 6 o'clock, 7 o'clock, 8 o'clock. You follow me, right? We're looking at the one. So obviously, we're looking at the 1 hour chart. Every candlestick represents 1 hour from left to right. Okay, up to down is price, right? Lowest price, highest price. Okay. Red candlestick means that the close was lower than the open. Okay. Green candlestick means the close is higher than the open. All right. So clearly in this hour right here, the close was way down here. Yeah. Okay. Let's talk about a trade. Like I said, that I just did this trade last night, Sunday night. I got on at 5 o'clock, and an hour went by from 5 o'clock to 5:59, and this candlestick was red, just like you see it here. Exactly the way you see it here at 5:59. Basically, this is what this candlestick looked like. Now, this green line right here that you see, this curved green line, it was green all the way to the edge of the candlestick. I mean, I know it isn't right now. You see some green and half the line is red, but at that time, at the close of the hour at 5:59, this line was still green all the way to the edge. Okay? So remember, we're on the 1 hour chart here. And then at 6 o'clock, this candlestick shows up. Okay? And at the time it showed up, this line, this green line, was still green all the way over to here. Still green. So imagine that green line all the way over to here. Okay? Forget all this you see over here. Just concentrate from here back. From 5 o'clock to 6:59. Follow me? 1 hour, 2 hours. Now at the end of this hour, this line had changed to red. Okay, changed to red. So when it does that, it also makes the half of the previous candlestick red, the line above it. Don't ask me why, that's just the way they do it, okay? Basically indicating that we now have price trending down. So what is this red line? Let me click right on it, right click on it. You see here it says Hall Moving Average. Okay. So let's set that up real quick. You're going to go over to Studies, upper right hand corner. And click on Edit. Okay. And I don't remember if it's a study or I think it's it's a step. Pretty sure it's a study. Yep, there it is. Okay. So under Studies, you got 3 tabs here at the top, right? You're on the Studies tab. Type in HU, you see Hall Moving Average. You highlight it, you click Add, it puts it over here. You click Apply, you click OK. Okay. And what you're going to get is you're going to get this line. Okay. Now I've beefed up this line, made it a little bit thicker. You notice down here it says width 4. Okay. How did I do that? I just right clicked on the line. I said edit the study. And I made the width 4. My colors are red and green. Red if the price is going down, green if the price is going up. So you can change these. You just click right on them, okay? All right. So that's how you get the whole moving average to show up. Now, this line turned red right here, probably somewhere kind of in the middle of the hour, the beginning of the hour, but you don't make the trade yet. I didn't make the trade. Remember, this is a real trade. This happened with real money. I know we're looking at paper trading account in front of us, but I traded real money trade on this, okay? At the very end of the hour, I noticed this line was still red. I waited just a little bit into the next hour, like a few minutes, because I noticed the price was coming up. I didn't want to, because I'm going to sell short here, right? We're selling short, we're going down. I didn't want to sell with the price down here. I wanted to catch it when it was up here for a little bit more profitability. Make sense? So remember, selling, for those that don't know, we're selling something we don't have. We're going to buy it back later. Okay? Google that, whatever. If you can't grasp the concept of selling something you don't have, just go Google it. Shorting stock, shorting futures, whatever. Okay? So we're going to short it because we expect the price to go down. So after a few minutes into this candlestick, maybe 705, 710, whatever it was, okay, I went ahead and sold. I sold at about 53,425, if I remember right. So about right there. Kind of near the bottom of the square, if you will. Near the close. Okay? But remember, this is a real trade I made last night. This trade, I shorted it about 53.425. Okay, the line is red. Okay, I waited approximately a whole hour. Okay, the next candlestick, you can see the price actually came up a little bit, right? 53.6. Even during the hour, the previous candlestick, it came up to 53.6. Okay, we're going to talk about stop loss in a moment here. Okay. So far, what I'm trying to convey to you is we don't make a trade until this line is red past the end of the hour, right? If it's red during the middle of the hour and you make a trade, it could turn back to green or turn back to its original color. You don't want that. That's a bad scenario. So don't make your trade till after the hour is over. Okay. So as this candlestick ended, I made my trade right at the beginning of this hour. Red line, I shorted it. Like I said, 53.425. Now, I'm going to talk here for a moment about stop loss. Okay. Because even though this is red, the market could still move against you, go the opposite way. So I went over here and picked the highest candlestick, which this one was at 53.8. Okay, I actually picked this one way over here, which was 53.9. Okay. Why did I pick that? Because I didn't believe the price was going to ever get back up above it, and it didn't, but it could have. See that line drawn all the way over to here? And you may be asking right now, well, how do you know which candlestick to pick? Okay, well, we'll talk about that later. It really comes down to your tolerance. How much are you willing to risk? Okay. For those of you that are paper trading right now, have been paper trading, you're about to go cash trading, let me just tell you straight up, you really don't want to go past 8 ticks. We're talking about oil futures trading here in the QM. You don't want to go past 8 ticks of your stop loss. Okay, this is not like paper trading with real money. You can't just let it go running off thousands of dollars or $500 or whatever and hope it comes back. You can't do that. Okay, so set your stop loss 8, 12 ticks out maximum. Okay, don't let it go beyond that. Okay, especially if it's not your money. Right. Okay. All right. So you can see it's at the next hour, 8 o'clock, the line was still red. And look at this little red line. This is the 3 EMA. Okay? It's the same thing, guys. Go click on studies, edit studies, look for EMA, exponential moving average. Set that to 3. Okay, I know some of you are going to say, oh, help us. All right, so we're going to click on it. Okay, I'm sorry. You're going to go to studies, edit studies. We're going to click. Okay, obviously it's a strategy, not a study. Exponential moving average. Okay, it's still not giving me what I want. Let's see. I think it's called, there it is. It's called MOV average. MOVAVG. This one right here. Moving average exponential. Highlight it, click add. It's gonna be added over here. Okay, I actually have 2 of them. Okay, but the only one showing is the red one, and I have the length at 3. So make sure you set it to 3. Very important. That's going to be 3, okay? The other one in here, just ignore it. I have it not showing on the chart. Okay, so this is your exponential moving average set to 3. This little tiny red line. Okay. Now stay with me. I know the video is getting long, but stay with me because this is really, really important for you guys that are about to go and trade real money. Okay. At this hour, you can see the thick HMA, Hall Moving Average, is still red, but really important, this little line is still below the big line. It's not above it because we shorted. That's important. It's still below it. Really important. Okay, so that's 8 o'clock. 9 o'clock. The Hall Moving Average is still red. The little 3 EMA exponential moving average red line is still below, right? It hasn't crossed over or gone above it, right? Still below it. And we can see that the close on this candlestick's below that one, right? So far things are good. Okay. 10 o'clock. A little bit of activity, not much going on here. Really, really tight hour, not a whole lot of trading, really tight price range. You can tell the candlestick's very small. The 3 EMA at the end of the hour is still below the red line, and it's still going down. That's good. On and on. 11 o'clock. Same scenario. 12 o'clock. 1 o'clock. This is when England and France and Europe comes online. They tried to give it a kick. Wasn't enough. Okay, even though on this candlestick the close was higher than the open and it closed higher than the previous close, you can see that the 3 EMA is still well below the whole moving average. In other words, we're not going to close our trade. We keep going. Boom. 2 o'clock, 3 o'clock, whoop, 4 o'clock. What's going on? It's not just a green candlestick, but you can see the 3 EMAs move sideways, heading towards the HMA. Okay? Now, if you're brave and you got a good solid stomach, you can hang in there and see if the HMA continues to go red, which it did. And matter of fact, it still is the next day at noon, which is right now. Okay? You could do that. A lot of people stay in there. They stay with the HMA. They don't care that the 3 EMA crossed over. They stay with it. Me personally, I got out right here. Okay? Where did it close? It closed at 52,675. Okay? So let's go look at a spreadsheet. This futures contract is called QM. That's its symbol. For every 1 point, which I won't go into what a point is, just stick with me on it, $500 per point for one contract. I sold short, which we call that getting into the position. Okay, I'll put over here we sold short, right? We shorted it. Okay. Okay. At 53,425. I got out at 52.75. Actually, I don't even know if that's right. Let me look over here. Got out at 52,675. Sorry, so we're going to change that a little bit. 52,675. So we subtract this one from that one, we get 0.75. That's almost a full point, right? If this was a 1, that'd be a full point, but it's not quite a full point. So now we multiply $500 by 0.75, and $375 was made for one contract. Okay? How long did it take to make that $375 on one contract? From 7 o'clock at night all the way to 4 a.m. So 3 hours short of 12 hours, 9 hours. Okay. 9 hours to make $375. Okay. Is that good? Yeah, that's really good. If you had 2 contracts, $750, 3 contracts, $1125. So okay, so you can see the power of building up your account to take on more contracts. Okay. Okay, so that's the anatomy of a trade. That's how you know the anatomy of a good trade. I strongly suggest you go back, watch this video again. Get it into your brain. Everything I had said, go back. Don't make the trade in the middle of the hour. The line could change color. Make the trade at the very end of the hour, the last few seconds, or even better, into the next hour. Okay? Make sure that your 3 EMA is below the HMA. It stays below it the whole time. If it starts to cross over like it did down here, you could decide to stay in or you could decide to get out, depending on, how, like I said before, how much you can stomach, right? All right. That's really important. I'm finding that trading by the hour has been very profitable. Okay? So a lot of patience here. You got to be really patient. All right. So I know the video is long, but it needed to be said. Okay. I'm going to go do, we're going to probably going to do a video about a bad trade. Okay. And talk to you about how you get out of bad trades quick. Okay. This is big money trade, right? $375 in whatever it was, 9 hours. That's nice. That's good money. Okay. But if we get into a bad trade, and one other thing I want to mention here. You'll notice just back here a little bit, of 4 or 5 candlesticks going back into Friday. You'll notice momentum was nice and high over here. Okay, and started coming down. All right, so this trade way over here really is coming off this high momentum that came down, right? Let me just talk to you real quick about what you don't do. See if I can find one. Maybe let me back out just a little bit. Yeah. Let me see. Trying to find one. Here's a pretty good example. You'll notice how the momentum is below this line. And we did get a lot of downward momentum. Look at this line turn red. See it right there? It turned red just for a little bit. That's a bad trade. Some of you are going to say, oh, this was good money if you did it right here. Yeah, it is. But we do not have a red line if you're going to short in this case. We only have it for a moment. We only have it for like 1 hour. And why? Because the momentum wasn't above the overbought line. It was below it. Momentum was weak. We want our trades to come from way below like this, or way down here, or way up here. Right? Looking at the bottom now, down here, guys. We want our momentum to be really high or really low. We don't want it farting around down the middle. We definitely don't want to be making trades with momentum in the middle like this. Horrible. Don't do that. Even this, don't get fooled. Don't get fooled into making this trade right here. It's not good enough. Okay? And you say, oh, the momentum, the whole moving average turned red, and then it turned right back to green. And why? Because you made a trade, you made a bad trade. Right here, this is not enough momentum. The momentum's too low. Okay, so over here we had nice high momentum, well above the overbought line, and it paid good dividends. 5, 6 candlesticks later, the line turned red about right here, like I said, and it was just really good all the way down. Now, just to clarify, you could have all these conditions: good momentum, high or low, line turns red, and the market could still fool you. Okay? And we'll get into another video about how we're going to get out of those positions quickly and minimize the losses. So here it is in a nutshell. We make good trades and make a lot of money so that we can absorb the few small bad trades that we get out early. Understand? Because you're going to have those too. But the good trades, the big money trades, are going to outweigh the small bad trades. All right. So that's it for now.